Economists say the interest rate environment is restrictive enough, with the repo rate at 8.25% and prime lending rate at 11.75%. The Reserve Bank has raised interest rates by approximately 475 cumulative basis points since the end of 2021. Consumers have been battling the cost of living crisis, with the Reserve Bank saying banks have noted an increase in loan defaults as some struggle to keep up with loan repayments. Inflation pressures emanate from the supply side, while demand-side risks continue to subside. Nedbank economists say the rise in inflation in the first months of this year were driven mostly by once-off increases in a few isolated categories rather than a widespread rebound in price pressures. Consumer inflation rose to 5.6% in February, up from 5.3% in January. The Bureau for Economic Research's Inflation Expectations Survey for the first quarter shows inflation is expected to increase to average 5.4% this year and 5.3% next year.
The South African Reserve Bank seeks to get CPI inflation at the midpoint of the inflation target range, which is 4.5%, and keep it there. And inflation prints so far this year have showed that inflation instead is above 5%. We continue to expect that CPI inflation will fall in the second half of this year to the 4.5% mark, and therefore allow interest rate cuts in the second half of 2024. However, it looks like this will probably be in September now, given that we have seen poor weather conditions which have had negative effects on agriculture, likely to see some upward pressure coming from that source. Besides higher interest rates, the South African Reserve Bank will also look at its GDP growth forecast at its MPC meeting, along with a range of other statistics as well. What's also important is what's happening in the United States, and the recent monetary policy meeting in the United States did not give any cause to expect an imminent interest rate cut either. So overall, South Africa looks set to continue to wait until September before we see our first 25 basis point cut, or that is 0.25%.
Upside risks to inflation include the drier weather conditions, leading to fears of crop damage that could push up food prices. Economists also say the rand exchange rate could be under pressure as a result of uncertainty related to elections. Loras Sefako Mosi, SABC News, Johannesburg.